What's up you guys, Tomy Shaw here, and today what I'll be trying to do is explain what are my criteria for investing, okay? The first question I asked is that, do I have control over the business? Can I influence the business? Can I do something inside the business to create more value? Because if the answer is no, then I'm gonna diversify my portfolio, because if you don't have any control, that's the only time you want to diversify in your business, or you want to go into many businesses or many stocks to try to eliminate some of that risk. Okay? The second question that I look at is, can I structure the capital structure? Can I have an influence to manage how much I finance my assets during using debt or using equity? Okay? I always try to buy a business or something that has more, the return on assets is higher than the cost of the debt, because that way then I can use leverage and I have control over leverage. And this brings me to the next question. Can I influence the return on investment? Because if I cannot influence the return on investment, it's going to be hard for me to get a decent return. Because not because the ROE of a business is 20% that you're getting 20%. Because if you pay double the price to book value, then actually you're getting a 10% book value return. So I always ask that question, can I influence the ROI? Of course, to influence that return on investment, you have to be able to control how you finance the deal, how you structure the business, and the more debt you use as leverage to buy more assets, the higher your return on investment. And the minimum that I'm looking for is a 20% ROI. I'm looking to get 20% on my money. And the next question, it's really easy to get 20% when you know how to structure a business. The next question that I ask myself, cash flow. Do I have any cash flow in this deal? Is it flowing towards me or is it going away from me? Because if I need to invest every single year in this business or in this stock or whatever, this is a negative cash flow, because when do I get my money back? I get it back in 30 years. When you're looking for cash flow, you're looking for something that gives you at least a 10% cash flow per year that comes in your pocket. Now, another question that I love to look at, can I get fiscal advantages? Because when you're investing in something, it's really risky. You need to eliminate that risk with the fiscal advantages that the government gives you. Because when you're investing, let's say in RSP or anything that that gives you a deduction on your revenue, then this eliminates some of the risk that you're taking. Because if you're paying 38.4% to the government, and you're getting that your deduction, well, essentially that reduces your risk by 38.4%. So if the market crashes by 38.4%, you're still at zero. Your risk is essentially lowered by the deduction that you got from the government. Okay, the last question that I ask when I'm investing into something is, when do I get my money back? That is an essential question that you should be asking, because if you're investing in something and you don't know when you're getting your money back, that doesn't make any sense. If you're investing for 30 years, 40 years, well, I don't want to wait 30 to 40 years to get my money back. I want it back at least between 4 to 6 years. That depends, of course, okay? Because if you own the business and you want to duplicate that business, you're going to get your money back 4 to 6 years, because you want to go into another deal and then you could repeat the same process. Of course, if you're investing in somebody else's business, like if you were to invest in my business, of course you're not going to get your money back in 4 to 6 years, because you essentially become an investor that helped to grow the company, and you're more of a passive income investor. So when you're looking to invest in somebody else's business, in stocks and bonds, well, essentially depending on your strategy, if you want passive income or cash flow, you're going to be in it for the long term and you're going to keep on investing. But for me, what I do is, when I ask the question, when do I get my money back? And there's many ways to get your money back. When the real estate market fluctuates, if it goes higher, then you can refinance that, get your money back, and get it sometimes at a better interest cost. So, okay, that's pretty much it, okay? because I see a lot of people speculating, and I always want to bring it back to investing. When you're investing, your risk goes down. When you're speculating, the risk goes up to the roof because it makes no logical sense. Speculating in investing or speculating in bubbles and stuff like that, for me, when I look at that, that makes no sense. So I'm always trying to come back and trying to understand, am I investing or am I speculating? And if you go through this checklist and you can't say yes to none of them, there's a good chance that you're speculating. And I just want to bring it back to reality, because if you don't have control, okay, how do you know the manager is going to take a good decision? How do you know that they're doing the best for your favor? How do you know that they're really trying to respect the law, that you're supposed to enrich the investors? Well, you don't know that. You don't. Maybe he's only there to get that $12 million bonus or that $12 million salary. You don't know the manager's what he's looking for. Okay, is he really for the investors or he's looking out for himself? Capital structure. Can you have an influence on how the business is structured? The question is no. How are you going to influence the return on investment? That makes no sense. A lot of people say that business is making 20% ROE. That makes no sense. It's not going in your pocket. It's going inside the business. The return on equity is for the shareholders that bought in the beginning. If you buy 4 times the price of the book value, you're essentially reducing that ROE 20% divided by 4 to 5%. Okay, so you just reduce your return to 5% and you're taking all that risk. Makes no sense. Okay, another question, cash flow, which way is it going? Can I get fiscal advantages? Like sometimes if you can't get no fiscal advantage, be careful, because fiscal advantages reduces the risk and it increases your cash flow, your free cash flow to grow the business, to go into other areas, and it helps you to have more control, and you don't have to use as much debt because you can auto finance your own deals. And the last question, when do I get my money back? That's an essential question. When do you get your money? If you get your money back, do you get your money back? So questions that you should be asking, okay? All right, that's it for today. Have a good one. Thank you. Remember to like, hit that subscription button, and I'll be posting at least once a week, trying to post once a week. Anyways, keeping you informed, giving you information like this, and that's it for today. Have a nice one, and see you on the next video.